Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all you guys had a very good day of trading today. And in today's markets, guys, well, it was somewhat of a flat day. The SPY and the QQQ not doing too much. We did have some sector rotation across the board. However, a lot of volatility is going to come into the markets tomorrow with the CPI release. We also still do not have any news from the reciprocal tariffs that Trump wants to do on every single other nation levying tariffs against the United States. So we still do have several other components of volatility that can be had over the course of the week, but today the markets were benefiting from a relatively muted day overall. Now, in terms of today's video, we're going to get into a few couple things together. Number one is going to be going over two company earnings that I have prepared for you guys, and those are going to be Coca-Cola and SuperMicro. Now, I know Shopify had earnings as well, and a number of other companies such as Upstart, DoorDash, and Lyft, but just to save time, I'll be doing Coca-Cola and SuperMicro overall because they had some quite significant moves in recent trading, which I do feel are noteworthy to bring up. Now, after that, we're going to take a look at our major technical analysis rundown of our major stock market indexes, followed by our big tech names, and see whether or not there's any good deals to be had in big tech, or maybe is it going to be more prudent to be waiting for those tariff announcements. So, should be a very fun video, guys. Bit shorter than usual, though, because I do have to catch a flight here soon, so I'll try to wrap things up quickly in today's video, so bear with me. Let's go on a little bit of a ride. So, in terms of the SPY, up about 0.08%, QQQ down about 0.24%, but overall, I wouldn't say it was that unhealthy of a day in the markets. You can see semiconductors pulling back ever so slightly. Big tech was fairly mixed on the day. The bottom half of the market, though, not doing too poorly at all. Only healthcare and financials very mixed, but we had some good outperformance in consumer defensives, namely Coca-Cola after their earnings. Real estate, utilities, energies, and industrials were actually fairly good. I would say it was a more than not balanced market today, with about equal names to the upside as we had to the downside. Nice little pop on Apple, though. Taking a look at the one-day relative, you'll see how balanced the market actually was. Consumer cyclical leading the charge to the downside, which was funnily offset by consumer defensives to the upside. All in all, though, very mixed market across the board. Energy, real estate, financials, and utilities. So the bottom half of the market, guys, really outperforming the top half in terms of today. Technology was down about 0.07 on the day. Where do we stand on the 1 week relative? Well, the sectors are still looking quite good. Only consumer cyclical and communication services, largely after Google's drop, were down, healthcare down as well, but the rest of the market doing quite fine. And as the SPY and the QQQ hold very close to all-time highs, we sit on a very beautiful 1 month relative performance. We are doing a lot better at this point in time than we were shortly before and shortly after Jerome Powell, so had some very decent market recovery, but I wouldn't say that we've moved anywhere, right? We've kind of really just been kind of range bound on the SPY, especially for the last 3 weeks, not only in the SPY, but also on the Qs. The Qs have largely been range bound, a very wide range, I'll agree, very largely range bound since Jerome Powell. So we're looking for that expansion eventually, but we have to get through a few key things first. Number one, of course, is going to be CPI tomorrow. We know that recently the narrative has been all around inflation and especially around what possible impacts the tariffs are going to have on said inflation. So if tomorrow, guys, this inflation read on CPI comes in at 3% or higher, the markets are not going to like it because it shows inflation is on an uptick and we are adding tariffs in the mix. The effect of tariffs probably will not be felt for another 3, 4, 5, 6 months down the road, but it just doesn't help out the narrative, right? So pay special attention to that. On the flip side, if CPI comes in at expectations or lower, the markets will probably be able to digest that quite fine. But overall, this is the biggest volatility event for the week. Now, in terms of earnings as well, after today, we don't really have too much. Vertiv tomorrow morning. We also have Generac, an interesting company, Reddit, AppLovin, Robinhood. On the Thursday session, Datadog, John Deere, Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, and the list simply goes on. But is there anything that can truly move the markets in a very large fashion? As if it was big tech? Probably not, right? So overall, guys, the week is not looking too bad. If we get CPI relatively unscathed, I think it could be a decent end to the week, unless we get that those reciprocal tariffs by the Trump administration. So we're still a little bit on edge, but it seems to be that the market is starting to digest the tariff news a little bit better than it was at least a few short weeks ago at this current time. So before we get into more technical analysis here, guys, let us dive right right into our earnings, and we're going to start off with a good one that has been muted for a while, and I have been hinting on the channel in the top 5 options videos, but also in these daily recaps, that buying Coca-Cola down here, guys, was probably a very decent proposition. Why? Well, it was a very easy monthly pattern, guys. This is a monthly breakout, retest, and run, otherwise known as a trend continuation trade into support 62 to about $60. If you were able to buy the dip, congratulations. And if not, I still do think that Coca-Cola is a legendary company, guys. And even if we have to buy it up here in the context of a long duration portfolio, I'm not too opposed to buying it. It's not the one that grows the most, but if your portfolio is oriented more to a defensive and high value, high quality with dividends portfolio, Coca-Cola, in my opinion, is somewhat of a no-brainer. So take a look at their numbers right here. We have a earnings beat by about 6.3% on EPS and a very healthy revenue beat by about 6.76. Now, Coca-Cola has been having some of the same problems as Pepsi and other distributors in the fact that consumers are just pulling back on discretionary spending. That's been the case for over a year at this point in time, and Coca-Cola has had to resort to a lot of promotional campaigns in order to kind of stimulate demand, which has slightly impacted their earnings. Now, Coca-Cola is a veteran at this game, guys. They've been through many times like this, and they know how to essentially rework their product mix and rework their promotional campaigns to continuously maintain that demand. Not only that, but they have so many different partnerships across the world, guys, whether it's their partnerships with McDonald's or otherwise. They're such a well-ingrained company in the overall economy that I'm never too nervous going into Coca-Cola earnings. Now, that being said, let's take a look at the article real quick. So Coca-Cola sales easily top estimates as global demand rises. For once, because recently in the last few earnings, the tone has not been so bullish, but now we're getting back to growth in the company. So in terms of net income, they came in at a very cool $2.2 billion, which is about just under 20% net margins. When we take a look at Coca-Cola, they've always benefited from tremendous net margins, both because of their distribution network at scale, but also their business model too, in terms of them just being able to basically ship the syrup of a product and have it manufactured as well in different parts of the world while keeping the recipes somewhat the same, right? Their net margins in recent times have oscillated between the high teens and low 20s, and that is really standard with what the company's been doing. Now, it's not as high as the margins we've been seeing on an annualized basis the last few years, as they have had to resort to those promotional campaigns, but still, anywhere just under 20% margins, guys, is extremely healthy for the company, and I do not think it shows anything is going wrong. Now, net sales rose 6%, which was very healthy. Organic revenue, which strips out acquisitions, divestitures, and foreign currency, climbed 14% in the quarter, largely fueled by higher prices. So Coca-Cola somehow still benefiting from pricing power. While most of Coke's organic revenue growth came from pricing, the company did see higher demand, unlike many consumer companies, including rival PepsiCo. So Coke remains the absolute king of the carbonated beverage industry in essence. Coke's unit case volume grew 2%, revising last quarter's decline. Very healthy gain there as well. You're not expecting unit case volume to grow, 5-10% per quarter like they once were. But if they can grow in the low single digits, that's roughly been the standard, at least since I've been following the company, arguably over the last 10 years. There's periods where it's higher, there's periods where it's lower, but in all reality, 2 to 4% is the long-term average of unit case growth per quarter. The company attributed its increasing volume to growing demand in China, Brazil, and the US. In North America, we grew both transactions and volume and had robust top line and profit growth during the quarter. Trademark Coca-Cola and Fairlife remain leaders in at-home retail sales growth. Looking to 2025, Coke projects organic revenue will grow 5 to 6%, which as well is the long-term running average of the company. Matter of fact, long-term running average is sometimes lower, towards 4% or 3.5%. So them guiding for a 5 to 6% rise in 2025 is fairly good. The company also expects comparable EPS will rise by about 2 to 3%, which is also quite fine. Now, it seems more likely in 2025, there'll be a little more price and a little less volume, but there will be volume growth, said the CEO. as it relates to our strategies around ensuring affordability and ensuring customer demand, if one package suffers from some increase in input costs, they're talking about the tariffs on aluminum here, guys. Big thing, right? Obviously, Coca-Cola cans are aluminum, but that is not the only packaging Coca-Cola uses. So the CEO, very smart response by him. We continue to have other packaging offerings that will allow us to compete in the affordability space. For example, if aluminum cans become more expensive, we can put more emphasis on the plastic bottles and etc. Right? So Coca-Cola, veterans of the game, they've been through this before. Tariffs, no tariffs, it does not really matter for them. Now, are they a good buy here at 67? Well, not as good as a buy as it was down here when I was hinting at it for about 2-3 months. MACD on the weekly is curling very, very, very nicely. And as I said, we are going possibly for the monthly trend expansion. And that's not something small, guys. We've been consolidating now for 2 years. So this monthly expansion can start and we can be going back to the $70 range. For a swing trade, I must admit you are a little bit late. Not going to lie, we're a bit late because the risk is the stop loss down here and the take profit is up here. But if we're looking at it for a long-term portfolio, guys, there's nothing wrong with this company at all. It's trading, as a matter of fact, right around its historical average. Forward price to earnings is 23.2, and the free cash flow yield is a very healthy 3.7%. You know, you usually look between 2.5% to 5%. So Coca-Cola at the midpoint there of 3.7 is very good, guys. I mean, the company has 20% margins. It's Coca-Cola at the end of the day. Their EPS and their revenue graphs are usually always up and to the right. Very consistent EPS and very consistent growth in the revenue pattern. Although some years are slower than not, Coca-Cola still remains a legendary name. And as I said, if you're more of a value or dividend-focused investor, you're looking for just stable growth, right? Not the Palantirs of the world, but just stable, not so volatile growth in a company with a dominant position with its brand worldwide. I think Coca-Cola should be a no-brainer for anybody that has a portfolio like that. And that is pretty much everything for the earnings for that company. Now, if we move into earnings number 2, we're going to take a look at SMCI. So SMCI has been marred with controversy. Will they be delisted? Will they not be delisted? Well, they have until February 25th for those filings, and the CEO said they were confident that they will be able to file in time. So SMCI, even though they were slightly down today overall, guys, I mean, in the after hours, they popped a decent amount. Let me just throw on the after hours trading here. So we're going to go extended hours, and you'll see that, I mean, SMCI went down initially, but then had a very nice pop of about 10% to the upside. The problem is, guys, is that the company in the most recent few days has been up largely. I mean, take a look at this rally. Bottom to top, guys, 65%. So it stands to argue, like, how much more do you possibly want, right? This was largely the earnings run up so far. So to see them end the day in the after hours, pretty much where they started off the day, is not too surprising. If anything, you're just looking for the daily uptrend recapture and possibly reset into the daily uptrend to the upside and reset the longer term time frames as well, right? Need to get this weekly uptrend back if you really want to see SMCI start curling and gaining back some of these levels to the upside. Overall, though, the earnings were not bad. They did still show that demand was excessively strong. And I'll be first and foremost in saying, guys, the troubles with SMCI was never surrounding their products. They have very, very high quality products that are used virtually industry-wide at this point in time. Taking a look at their earnings, well, I don't think we have them here, but we do have them in the article. So TradingView has not loaded them, but they were pretty good. Let's take a look. SuperMicro is confident it will meet the SEC deadline and reach the $40 billion mark in revenue by next fiscal year, which is fantastic revenue, guys. Keep in mind, they're going to make $40 billion in fiscal year 2026, and the market cap of the company right now is only $22 billion. That is a fantastic forward price to sales. The company's valuation is just being kept down because of the regulatory scrutiny, of course, surrounding those filings of their accounting. Now, moving on in, let's get into it, right? So let's get into the just the article. They gave optimistic commentary for fiscal 2026 and delayed the annual report that shadowed its slashed fiscal 2025 revenue guidance in Tuesday's preliminary second quarter results. The CEO said he's confident that the company will file its delayed annual report to the SEC by the deadline of February 25th. The company also said it expects to hit $40 billion in revenue in 2026 Analysts were only polling for 30 billion, so largely surpassing the estimates. Now, what are they doing for this fiscal year, 2025? Well, for the near term, the company slashed its guidance for 2025. The company said it expects revenues to range between 23.5 billion to 25 billion for 2025. That was down from a previous forecast of 26 to 30 billion dollars. So they did miss the estimate here in terms of revenue, but the company is still growing in terms of leaps and bounds above last year's revenue. The only reason that they're kind of missing on guidance here, guys, is because they're scaling their liquid cooling offerings. They've been scaling those for about 6 to 9 months at this point. They do command about 70 to 80% of the entire liquid cooling market share, over and above HP Enterprises and over above Dell as well. They spent a ton of money for liquid cooling racks, and right now they're kind of just ramping up production of those. Before, they were doing air-cooled, so they had to shift their entire production mix from air-cooled to liquid-cooled server racks, which obviously give more power efficiency and more temperature efficiency as well, which allow the cards to run more smooth and efficiently, right? So that's why they're shifting around the product mix. So that's why the guidance is really tough to gauge as they now start ramping this brand new segment of their business, which is the liquid cooling racks. Now, the company also said it expects to report net sales between 5.6 and 5.7 billion for this quarter, and that was slightly under the estimate as well of 5.89 billion from Wall Street. But all in all, guys, the company is growing well. Their products are actually quite solid, and I swear to God, if it was not for their accounting mishaps, the company would be trading a whole lot higher because the product is good, the fundamentals are very good, and they are, at the end of the day, a highly required product for this AI ramp build out, especially for Blackwell. They're a huge NVIDIA partner. And back in January, guys, they did say on their keynote when they were speaking during the CES convention with NVIDIA as well, they did say that they are heavily partnered with NVIDIA. The relationship was still good, and they will be NVIDIA's go-to #1 for partnering with server racks for a full application. Let's say you're Meta, Amazon, or Microsoft, the best application so far. Dell has good server racks, HP has good server racks as well, but the SMCI ones are really tailored specifically to those NVIDIA Blackwell chips. So it's really a very close relationship between the two companies at this current time. Now, in terms of their fundamentals, where do they stand? Well, they're growing revenue and EPS at a fantastic clip here, guys, for the next 3 years, right? Revenue of 20%, EPS over 30% growth. Look at this revenue growth curve, looking very, very, very good right there. Net margins are not the highest because they're scaling right now and they're having to deal with a lot of capital expenditures. But look at this EPS ramp curve. Fantastic growth in terms of EPS, at least for the next 2 years. And in terms of their revenue, I mean, very good revenue here for the next 2 years as well. 2026 will be revised now, closer to 40 billion on TradingView. So this chart should be a lot higher than it currently is when TradingView updates its data tomorrow. Where do they stand right now at 42 bucks? Well, they're trading at a forward price to earnings of only 15.3. Down here at $20, even I was saying on the channel, it's a no-brainer bid. If you can get over the accounting regulation scrutiny, which is a big one, because if they don't do it, they will get delisted, right? If you can get over that and want to take a little bit of a bid, a little bit of an attempt down here at $20, it was a no-brainer buy. The valuation was just too cheap. The forward price to earnings growth here, the PEG ratio, is sitting at a 0.45. That is your price to earnings divided by your forward EPS growth. It's sitting at a 0.45, guys. And even if you were to cut this EPS growth in half, well, this PEG ratio would only go ×2. It would be a 0.9, which is still under 1. Fantastic. Anything under 1 is very cheap. Between 1 and 2 is okay, and above 2 is cheap. Forward price to sales, guys, 0.94. Next year, they'll be doing about $26 billion. Well, this year, 2025, they'll be doing about $26 billion in revenue, $24 billion in revenue. And that is really under a 1 price to sales. If you were to measure with 2026 with that forward guidance of 40 billion, well, in all reality, they're sitting at a 0.5 price to sales when measured against 2026 fiscal year revenues. So the company right now is cheap. And even right now, guys, at $40 where they're sitting right now, it is still cheap. I'm a big fan, though, of waiting for some price action structure. If we somehow get a higher low coming down into this region right here, I will label it on the chart, into these guys, right, which is about $36, $35, will line up with your short-term moving averages as well. You're going for the daily trend change and daily trend change expansion as well. And you are going possibly for the weekly trend expansion as well. The company has not had a new weekly uptrend, guys, since pretty much all the way back here. You can argue there's a very tiny one right here, but I think you can see what they're doing now. They've been bottoming out, trying to recapture the moving averages. And look, this is the first time they've recaptured the 12 EMA in a very long time. So if we can get that weekly uptrend going and the AI narrative and semiconductors pick back up at some point this year, I think we probably have a decent little runner here on our hands. $50, $60, maybe even $70 would not be too far-fetched for this company if we see a broad market rekindling of that bullishness towards semiconductor exposure and semiconductor names, which I do think will happen. So swing trade, yes, but just don't go too heavy, right? And for a long-term portfolio, probably not, just a little bit too cyclical for me, but I'm not opposed to throwing a little bit of cash at this for some swing trades. Could be a decent proposition. Just do not put in more than you're willing to lose. And that is the analysis for both of those companies. Hopefully you guys appreciated that. Now, diving into our technical analysis for our major indexes, not much has moved, guys, and not much will move before the CPI. If CPI comes in hotter than expected, I think you guys know what's going to happen, right? We are just going to get shot right back down into this support range on the SPY, which is largely 600 down to about 595. You want to pay special attention this week to a break of 591. That could be bad CPI and bad tariff announcements from Trump. If that does happen, guys, well, unfortunately, daily downtrend simply continues. And unfortunately, we're going right back down into further extended weekly consolidation, which could see us tap down into the 585 to 580 level of support, which is a good area to start bidding on the SPY. If you ask me, guys, look how well the SPY has held this 26 EMA the entire time of the last 2 years worth of rally, guys. Buying the SPY at the 26 EMA is usually a very good buying proposition. So I'll be looking out for that. But as of right now, it is very, very, very range bound. What the bulls are looking to do, they're looking for that trend expansion beyond the all-time highs, and so far we are just not getting it. Every time we approach the all-time highs, there's always something that happens. So maybe the something that happens is going to be CPI, maybe it's more Trump tariffs, but the sooner the better we get through that volatility, guys. And we'll take it from there pretty much, taking it one day at a time. As I've said, whenever we come into the highs, if we're in swing trades, always a good proposition to be taking profit on those swing trades. And then we're going to be looking to buy some of the fear dips down there in the lower 590 range. Moving into the Qs right now, give me a brief moment. Into the Qs, down about 0.24%. Not the best day for the Qs, but then again, not the worst day, right? We have not lost any structure whatsoever, still encountering resistance here. Let's call it 532, down to right about here, 526, this roughly 6-point range. We are above the moving averages, guys, but we are pretty much trendless right now. You can see we're trying to go for some form of daily uptrend recapture, but they just cannot get it done. So if CPI is bad and we get the tariff announcements, we are probably heading right back down to where we were at the lowest points of the last 2 weeks, which is roughly about 515 down to about 510. On the weekly, what would that look like? Well, we would just be going into a bit more weekly consolidation, right? We've just been range bound on the Qs now for approximately the last 2 months since Jerome Powell. And same concept as the SPY. Look at the 26 EMA. This is October of 2023, mind you. Since the last 2 years of rally, every time we start to get a fear bid into the 26, it's always been a great buying proposition. So the logic is as follows. When we start hitting into the fear lows, I'm a buyer. When we start clipping into the all-time highs up here into resistance, I am selling a lot of my swing trades. That's just how I've been playing the markets since Jerome Powell, and it's been a very fun time so far. If we're looking for the bullish narrative breakout of the market, you need a clean breakout, retest, and then run. Then we can reevaluate for more call options, more bullish positions. But as of right now, I'm just having a lot of fun with very basic swing trades, and especially writing options, guys. When I write my options down here, very easy, because then when we bounce, you can close out at a profit, get all the buying power back, and just reset. That is how my account right now is up roughly 8-9% this year so far with today's trade, and the SPY and the QQQ are only up like 1-2%. So we're outperforming without even taking on that much risk, just playing the range. When it comes down here, writing short puts, and then when it bounces, you get higher. And even if it continues lower, if you write down it continues lower, guys, I'm getting such good levels, such good strike prices on my short puts, because when we come down here, the VIX spikes, and I can usually write levels way, way, way below, to where if it does come down there, well, look, I want to be assigned, because we'll be close to the 26 EMA on the Qs. Moving on to XLF. XLF down about up about 0.25%. Decent day by financials, right? Not losing any levels. Higher lows are set 50.44. The bulls are trying to go for the continuation of the daily uptrend. We'll see if they can get that. In the event we roll over and lose this 12 EMA and go into a daily downtrend, is it that big of a deal? No. Who's in control in longer time frames here? Well, daily downtrend, big engulfing move. Now the bulls need to reset, looking for a higher low for further trend continuation. So where could we come down to? Maybe 50 is the 12 EMA right here. Below that support is roughly the 49 to 48.5. Same concept, 26 EMA on the weekly chart, guys. You can see the last 2 years, they've clipped into it a few times, and every time it's been a very decent buying opportunity. So we'll see what happens with financials, but overall, they have been very strong. No new trades on financials for me. I've been waiting around a little bit for like stocks like Bank of America to kind of come down into my levels. Even Visa and MasterCard, they're just not pulling back at all. So financials, I'm not chasing them right now, but they're still a very solid trade. Moving into XLV Healthcare right now, still not losing a level, holding lows of support, which is 145. However, we are clipping into resistance once again. Resistance is 140, let's call it 149, down to roughly 146.50. And you can see it has been problematic a few times for the bulls so far. We are also looking on the weekly for the infamous cup and handle pattern formation. What supplements that trade is the fact that we're holding above the moving averages on the weekly. And also, I'll move myself over, we are now really starting to roll into positive momentum with the MACD cross on the weekly. So it's looking good, guys, but we're just looking for a weekly higher low for possible further trend continuation. So even if we start breaking down here on the daily into daily downtrend, right? It doesn't really matter. The bulls have a lot of space on the weekly. Anything above 136, just going to be looking for a weekly higher low for possible trend break and maybe a break up to the upside of this resistance zone. Healthcare is not looking too bad overall, guys. There's some plays that I'm interested in taking. One of them is TMO. TMO is looking good on this pullback right here. I mean, TMO has just been largely range bound here for the last 2 years, but every time we come into the lower end of the range, could be a decent little swing trade for TMO. UNH, I'm also looking at a little bit. If we come back somehow into like the 505, 500 area, could be a decent little swing trade. Once again, just using classic support levels, guys. And this green line right there is the 200 weekly moving average. UNH does not test that very often in its history, and when it does, it usually is a very good buying opportunity. So I'd be looking for UNH somewhat a bit lower down there. Moving into semiconductors now. So semiconductors not performing too poorly today, but still encountering that level of resistance, which is 260, down to roughly where we are right now, 250 bucks. We are still trapped between two ranges, overhead resistance and below support. So although the bulls on the daily are trying to go for that daily uptrend expansion, we're trying to expand into resistance. If we get rejected right here, looking for a higher low, anything above 235, looking for the higher low for potentially a new leg to try and smash through that resistance again. Overall, though, the sector is somewhat muted. I've told you guys how I like playing this one. I'm only looking for NVIDIA, TSM, and AVGO, looking to write short puts under the market on all three of those names, because overall, we're just range bound. So whenever we're range bound, we come to lows, NVIDIA drops, TSM drops, and whatnot, and I can find some premium writing puts under the market. That is exactly what I'll do. Mind you, NVIDIA is also a decent opportunity right now for a long, but we'll get into that when we cover their chart in just a few short moments. Moving into the Russell right now. So the Russell down about 0.58, same concept as the SMH we just saw. Trap between overhead resistance 232 down about 225 and below support 216 down about 210. Easiest time frame for this one, guys, because the daily is quite messy, right? There's no trend right here at all, just really stuck into resistance. The easiest time frame is the weekly. What we are looking for is one of two things. Either we're going to get a weekly uptrend, break through resistance, reset with a higher low, use it as support, and then run. This retest is a decent entry for a long, but I'm not trying to take a long here into resistance and crossing my fingers that we'll be able to break through it. I'm going to wait for the bulls to confirm the break and the retest for an entry. The only other trade opportunity that I see right now on the Russell is being patient, if you want to play it, and waiting for a possible pullback into the level of support, which you can see the bulls have been finding great bases of as of lately, and that is down in 215. So those are the two trade opportunities I see for the Russell, but as of right now, no trade. Yields are still somewhat of a mixed bag. The risk on trade, as I was telling my Discord members this today, the risk on trade, guys, has kind of vanished, right? Bitcoin hasn't done anything for 2 months. The quantum computing stocks are kind of down. Sure, we have some outperformers here and there like ASTS, Rocket Lab, some of the small modular nuclear reactor plays like SMR, Oklo, some of them are doing well. But can we really say that this is a risk on market to the tune of how we saw it in November, where no matter what you would buy, it would just go instantly up? No, you can tell it's a very picky market right now, which is why small caps are somewhat still muted. Moving on to the Dow Jones up about 0.28% today. I mean, not the best day, not the worst day for the Dow, just kind of holding the levels, right? I do not see anything wrong with this trade. The daily higher lows are pretty much still right here, 43,900, and still in the context of a daily uptrend cycle, but now has devolved into some form of a tightening range, similar to the SPY at the all-time high. So one of two things is going to happen. Either the bulls are going to continue on their domination and blast through the all-time highs, daily uptrend continuation, or we are going into a daily downtrend, which would not be the end of the world because the bulls have so much space on the weekly. Weekly downtrend into a nice engulfing move. If we pull back on that daily, what's it going to look like on the weekly? Just looking for a weekly higher low, guys. Anything pretty much above these lows right here, 41,900. Just looking for a weekly higher low for possible further trend continuation. So if you're looking to trade the Dow specifically, I would take a look at the 12 EMA here on the weekly, 43,700, all the way down to our horizontal support of 43,300 right in that pocket. Same concept as other ones I was showing you guys. When we clip into the 26 EMA on the Dow Jones, it's usually a very easy buying opportunity, whether you're using futures or whatever you're using, you really for the Dow Jones, right? Easy buying opportunity for the Dow. Just watch for the clips of the 26. But if you come below the 12, that's like a half size position. And then when you come into the 26, full size position, and then just go for that weekly uptrend shift to the bulls. And that's pretty much everything for your sector rundown. Yields we're not going to look at. They haven't moved. Bitcoin as well, we're not going to look at. It has not moved, guys, in the last 7 days. I'll skip through it just to be time efficient here. Let me check the time because I do have a plane to catch and I have to check out of this hotel. And the next time I see you guys, I'll be in Thailand. So keep that in mind, right? So I'm going to make this one super efficient. Moving into Apple. Apple up about 2.18%. I mean, not the worst day for Apple, right? Up 2%, but the reason I say not the worst and not a super good day is because we're into resistance, right? 237 down to about 231. You can see the bulls made a good effort, but we're getting trapped right here into resistance. And this area has plagued the bulls a number of times over this past year, right? So moving on further, what are we trying to do here on the daily? Well, the bulls are desperately trying to go for the daily trend change. We have not gotten it, guys. That is a break and close above 234. Have not gotten a close above 234 for the daily uptrend. So the bears can still take this one, send it to the downside into a new daily downtrend as well. Overall, we are just trapped between overhead resistance and below support, which stands at 225, 215. The way that I want to play this, I'm not going for the recovery moonshot for Apple right now. I think the valuation doesn't really support that in the first place. They're trading very rich for what they are right now, which is a company that's struggling to grow top-line revenue and struggling to expand its refresh cycle for its main product, which is the iPhone. The Macs and the iPads were doing fantastic. The services revenue was doing fantastic. However, right, continued China weakness and the iPhone sales are still declining. You cannot say that Apple is going to go without buybacks because Apple cheats, right? A lot of this move right here was buybacks. They cheat. I mean, it's within their right. They make a ton of cash to do it, right? But it's not because the fundamentals of the business are improving. Do not kid yourself. Now, moving on in, if Apple drops down to the lower end of this, 215, I might be looking to go shopping 210 down to about 200. Because if I'm going to buy Apple here for a swing trade, I need to get a very, very good price. Because as I said, the fundamentals are not telling me like a screaming buy for upside right now. I think there's far better bets in the market in big tech specifically, but that's just how I see Apple right now. Moving into AMD, give me another brief second. Moving into AMD, up about 0.56%. So, I mean, AMD is really not doing too much, right? It's trying. It's trying, guys. I mean, give it the benefit of the doubt, right? It is trying. It's trying its best. I know it's not getting really far right now, but it's trying. So, we know the context, guys, is downtrends overall. The monthly is a very clear downtrend, as I always say. The weekly is a very clear downtrend as well. No secret there, right? However, the valuation of the company right now is getting to a level where I think it's worth a shot. If you want to give this company a shot, I'm not trying to, impose my conviction on anybody. I mean, some people like this stock, some people absolutely hate it. But if you're the type of person that, wants to give this one a chance for a longer duration swing trade, well, now is kind of the time, right? At a 0.57 peg, which is super cheap, growing revenue and EPS, growing the fundamentals of the business this year, and expanding through that data center ramp, they're not going to beat NVIDIA. Can they gain 5 to 10% market share though? Yes. And the fundamentals, That's what's priced in right now. 5 to 10% market capture within the next 2 years. So you're going to give this one some time, right? On the monthly, we're coming into big support, 113 on about 100. My favorite way of playing this one, guys, quite simply is I'm not trying to time the bottom. I'm just looking to write short puts. If you get a big red day on AMD tomorrow or the day after, I'll once again write short puts around the $100 range, which I feel is very fair for the company. What the bulls need to do, though, we need to get a bigger bounce than this. You need to see a very large bounce coming into the 120 range. Give me an engulfing bounce, reset the daily uptrend, and then we can start tackling the overhead resistance area, which stands right now 120 up to about 130, and start challenging and recapturing one time frame after the next, and give me a weekly engulfing move and try to reset the weekly time frame. So it'll take a long time to reset these time frames, guys. However, now could be a decent area to throw in some bids on this company that is trading very cheap. Moving into Amazon. So Amazon down about 0.16%, but I mean, Amazon's just holding support, right? 230 down to roughly 225. Decent area for Amazon. On the daily, we're riding the 26 EMA. Down there would be roughly the 50. Overall, though, guys, I mean, we did lose the daily uptrend after earnings. Now, is it going to be a case in point of lower high into lower low flush? We will see that in the next few days. But as of right now, Amazon, I do not see any major red flags. And even if we roll over this daily time frame, is it that big of a deal, guys? Not really. What are we looking for in the larger time frames here? Who's in control? It is a beautiful, beautiful, beautiful weekly uptrend for the bulls. You would just still be looking for a weekly higher low for possible further trend continuation later on into 2025. Their earnings were fantastic. We covered them a few short weeks ago at this point. Now, the higher lows, anything above 216 is looking for a higher low. So if we pull back more into the 12 EMA on the weekly, you can see the bulls have held the 12 weekly EMA for largely the past, 6-7 months at this point in time. If we even lose that, that's where it gets really juicy for me, guys. 213 down to about 206 is my sweet spot for Amazon. I would love to write some puts in the 215 range, but we are just a little bit too far away from that now. What will I be looking for, guys? I am quite simply looking for, let me move this over, but those are the earnings in case you guys wanted to look at them. What are we looking for here? Monthly higher low for further trend continuation. And where's that higher low? If my Picasso drawing is accurate, should be coming into the 12 EMA on the monthly, guys. And look, whenever it touches the 12 EMA in the context of this most recent 2 years worth of bull rally, usually a decent buying opportunity. So the confluence of the multi-time frame analysis, daily, monthly, weekly, shows that 215 to 210 is an area that we can be bidding on Amazon and have some decent confidence because the long-term bulls are at our backs. Moving on to Google right now. So Google also down 0.6% today, but have we really lost any major levels? Not really, right? We're barely holding on support. You can make an argument that we might have lost it, and I could give you that point. That's very fair. Overall, though, who's in control here? Short-term bears, right? Still in the earnings slide right now. And if anything, with such a sizable drop, any rally, you may just be looking for a lower high. But if we do bounce into that location, the good thing is that, well, we'll be back within the confines above the support range of 192, roughly down to about 187, right? If you do a nice little bounce, at least now you have that support to be able to reset into a daily uptrend. We'll see, though, if for some reason Google flushes, because right now it's not so clear, right? But a big red day tomorrow, let's say, then it's a clear support, break, and then any bounce will be a resulting lower high into resistance, and then maybe looking for downtrend continuation. One thing is for sure, we're coming up, guys, into one of my favorite levels here, 180 down to about 175. You remember when I was up here and I was constantly saying, I don't really want to buy up here. I'll be more interested in going heavy down here. Well, now we are there, guys. When the company is trading right now at a 1.4 peg, I'll show you that on the weekly. 200-day EMA is right there at 175, guys. Look for historical confluence. When Google taps into the 200-day EMA over the last 2 years of trade, has it been a good buying opportunity every time it clips into there? Yes. So if it clips into here again, are we going to be buying? Yes, absolutely, right? Now moving on to the weekly as well. So the weekly, you can argue, oh, well, they've lost weekly structure, and I also would agree. However, right? Take a look at what's been happening here. Google on the weekly, right? Between the 26 and the 50 EMA. Look, in the historical context of the last 2 years, when we break the 26 and touch into the 50, is it a good buying opportunity? Yes. Confluence 180 to 175. Once again, that area shows up. On the monthly, oh, you guys are going to love this one too. The monthly time frame, monthly uptrend, pull back into my same box that I have not touched, 180 to 175, 12 EMA on the monthly. Has it been a good buying opportunity to buy Google at the 12 EMA? Yes, that's just technicals and the fact that Their fundamentals are very good at a 1.43 peg, 30% year-over-year cash growth, cloud growth, 27.5% net margins, revenue and EPS growth growing at double-digit figures for the next 3 years. All of that is telling me that I should be buying Google stock at 180, 175. You guys do you, but I will be buying. Moving on to Meta. Meta down about, or Meta up rather. Meta down, that's saying something, right? Meta up about 0.33% today, still doing nothing. Meta bulls are getting a little bit tired right now, guys. Overbought conditions on the daily now for about a week's worth of time. You can tell momentum is slightly slowing down, but that's not to say that the stock's going to absolutely crash, right? What we're looking for is a daily higher low. Anything above 605, looking for the daily higher low for possible further trend continuation. And even if we lose it, guys, even if you lose it, daily downtrend, so what? Doesn't really matter, to be honest with you. I'm being very raw today because a lot of people overthink the technicals, right? Just use the higher time frames when you're unsure. It doesn't have to be absolute moonshot and absolute flush to zero. It's always a gray zone, right? Just look at the levels very closely and just use historical events that have happened in the past, right? If you go for a daily downtrend, it's just looking for a weekly higher low at this point. Anything pretty much above 590. So much space to set up that weekly higher low for further trend continuation. And where might we pull back into? Well, the same area where we pulled back into now for the last 6 months of trade. Can it sometimes break below the 12 EMA? Sure, but I'm starting to be a buyer. 640 down to about 630 between the 12 and 26 on the weekly, and retest of the breakout zone. That is quite simply a breakout, retest, and run trade. Very nice opportunity on Meta, but buying it here at 720, unless you have a 2-3 year time horizon for a long-term portfolio, buying here for a swing trade on Meta, guys, is just not good practice. It is not good trading habits. Can it work? Sure. But if you get into the habit of buying things like this at the highs on daily overbought conditions, it's just not going to be a good recipe in the future, trust me. Moving on to Microsoft. Microsoft also down about 0.19% today. I mean, Microsoft is just doing a whole lot of nothing as well, right? We know it's largely trendless. I mean, the bears are trying to go for the daily downtrend flush, but I mean, they're not going to get too far because in all reality, we're sitting in a very, very large area of support right now. We're above an area of support rather, which is these zones right here, 405 down about 390. You can see Microsoft has just been trapped there. This is the weekly time frame. We've been trapped here for largely what, the last year of trading? So I wouldn't be surprised if the Bulls play defense once again. Now, the Bulls are just looking to get a little bit of momentum going. What do they have to do? Have to reset the daily uptrend. Take out 418. Or get close to it and give me the higher lows and higher high sequence, give me a daily uptrend, then your weekly bounce will be underway, and then we will see how we deal with overhead resistance at 426 up to about 435. I love Microsoft down here. I continuously play it with short puts under the market. 405 down about 390 is the target zone for me. And if you don't have the capital to do it with Microsoft, you can always use something like a MSFU, right? But we don't go too close, guys. They're monthly contracts on this one. I'm sitting down here at like $35 to $34. They want to fill me on 2 times Microsoft leverage. At the end of the day, I know it's a leveraged ETF, guys, but Microsoft doesn't really move that fast to begin with. So if we're always concentrating on buying the lower end of these, we should be fine in the grand scheme of things. Microsoft's not going anywhere. The fundamentals are fantastic. Their earnings were fantastic. It's just we're kind of stuck in a range. So when we're stuck in a range, the best strategy, in my opinion, is running short puts, running the wheel strategy, which I always show on the channel. Moving into Netflix right now. So Netflix doing fantastically again, but they're down 2% today. But it's perfectly fine, guys. Who's in control here, right? Well, it has to be the daily bulls. Daily uptrend looking for a daily higher low. At this point, anything above 965 looking for that daily higher low for possible further trend continuation. We will see if they bounce at the 12 EMA and this previous resistance, which is now support around the 988 mark. But if we flush and roll over the daily downtrend, is Netflix finished? Is that it? Is it going to zero? No. But are we expecting maybe a little bit of weekly consolidation? Sure. And where might we be looking for that weekly consolidation of this weekly uptrend? Well, where has Netflix always found a local base of support recently in the last roughly 2 years of rally, save maybe for the fall period of 2023, right? When we're buying Netflix in the context of a trend continuation trade, right, the breakout, retest, and run could be an attempt to be made here at the 936 to about 900 level. So let's call it 930 to 900. Wouldn't be opposed to taking a little bit of a swing trade on Netflix, but I wouldn't be going too heavy, guys, because on the monthly, we're very extended from the 12 EMA. I do not like buying companies when they are this extended because more times than not, you get very extended and you have a big monthly pullback, right? Get very extended, the big monthly pullback. I'm a big fan of waiting for that larger form pullback, and for me, that'll be closer to 900. So I'm going to be patient with this one, but all in all, fantastic company, not selling a single share in my long-term portfolio. Now, moving on to NVIDIA, let me just check the time again on the video. Sorry, guys. Everything is live right now, not taking any breaks or whatnot. And NVIDIA right now, 0.58% to the downside. I mean, NVIDIA is doing quite fine, but as I was saying in the most recent few videos, right, we have a very nice daily bounce underway, daily downtrend, now engulfing move, but where are we engulfing into? Into resistance, and you can see the bulls have been struggling with this resistance all the way up to 135. So 134 down to about 126, $10 worth of resistance. If we cannot make it happen, we have a lot of space, guys. Anything at this point above 112, looking for a daily higher low, and then maybe gather more momentum and try to smash through that resistance again. Overall, I do not see any red flags on NVIDIA. As a matter of fact, if we do go for that pullback, right, for the higher lows, I'll be looking to write short puts again. 120 down to about 115 is going to be my sweet spot to write short puts, but it's very tough to buy NVIDIA here into resistance for a swing trade, right? Try your best to wait for the higher lows, and then you make an attempt for that trend continuation trade, right? On the weekly is not looking terrible. I mean, it is arguably a weekly downtrend. We have a nice move here by the bulls, a lot of space off the lows. We will see if they can also reset this eventually into a weekly uptrend. Keep in mind, NVIDIA also has earnings here, Wednesday the 26th. So not in too much time from now. I'm a big fan though, guys. I'm a big fan of buying. If we're going to buy call options or call debit spreads, you want to be as close as possible to the 200-day EMA, this green line here at about 120, or the support area 115 to 110 to make an attempt for some big longs. We're looking for the monthly higher lows for further trend continuation by NVIDIA. They should be doing very good, guys. Big Tech literally just told you they're committing an extra $350 billion combined for more chips and more servers and more data centers. So do you think NVIDIA's growth is done for this year? Probably not. And the valuation, mind you, even though it's NVIDIA, right? The valuation is actually not that bad. I'll redo it after earnings. The valuation down here at 124, if we factor in 2025 numbers, it's not here yet. I'll redo it. The PEG ratio right now is about a 1.6, 1.7. For NVIDIA, that's really not that bad. Moving into Tesla, guys. So I hope you guys heeded my warnings, right? Any longs you would have had to close here. We flushed support. I was telling you guys, watch out. If you flush this support, it's not going to look good. Not only is it daily downtrend, it is also weekly downtrend and also confirmed monthly consolidation. Now, Tesla does this a few times. Let's relax here for a second, right? Huge monthly moves, retest the 12 EMA. Huge monthly moves, getting close to the 12 EMA. Huge monthly move, close to the 12 EMA. You guys get the point, right? So when you have such a crazy rally like this that is not fundamentals based, but is largely Elon and Trump based, and you have a huge rally and you're way far from the 12 EMA on the monthly, is it a good thing to be buying up here, guys? Do not do it. Do not get caught up in the hype cycle. Nothing wrong with trading it, but wait for the pullbacks. Be patient. There's so many other stocks to trade, guys. Why are we only focused on Tesla, buying Tesla up here? We should not be doing it. It is not good practice to do, especially when the fundamentals run away from the business. I understand. I'm a Tesla shareholder. I know they're doing robotaxis in the future. I know they're doing Optimus. I know they're scaling their energy business extremely well. We went over it in their earnings, and still, as a Tesla shareholder, I am not buying 407 at a 6.1 peg. I am just not doing it. It is not worth it, guys, right? No matter the growth that you put on the free cash flows in the future, that is 4, 5, 6, 7 years in the future. Not right now. The stock market is only forward looking to a certain extent, guys. It's not going to give you the pricing for 2030 just yet, okay? So relax on that one. Now, moving on in, the easiest time frame to understand right now is the monthly. Where are we going into? We are going right back into the 300 level, test of the 12 EMA. We will see if they can find a base, set the monthly higher lows, and then maybe reset for monthly trend continuation. But as of right now, the bears are in control of the daily and in control of the weekly as well. Coming in hot here, daily oversold conditions and the 200-day EMA. I'll be looking to write short puts. When we come down into here, we're almost there. Come down a little bit more, I'll write short puts under here, guys. 290 to 280, all benefit from the volatility. And if you wanted to make an attempt, small attempt, because usually you want to wait for the weekly uptrend to get it back, to get a nice trend, to get in with size. You don't want to be catching the falling knife of a weekly down leg, right? So we can make a small attempt, though, coming into it hot. 315 down to about 300 if you want to make an attempt at it. I'm not opposed to it because it will be daily heavily oversold conditions if it does it in one shot, you could get a nice bounce, but any bounce will be a resulting lower high and maybe retest before resetting the daily uptrend. So be patient with it, guys. Be very patient with Tesla. Moving on to Palantir now. So Palantir down about 3.45, but I mean, Palantir is doing fine in the grand scheme of things, right? Beautiful daily uptrend after their earnings. And now just looking for a daily higher low. At this point in time, anything above 98, 99-ish, going to be looking for a daily higher low for further trend continuation. Palantir does this all the time. Extension from the 12 EMA, and now we just pull back potentially into the 12 EMA. Not looking too bad. Nothing to see here, guys. Blue sky breakout territory. Weekly uptrend all across the board as well. Just looking maybe even for a weekly higher low. So even if Palantir loses the daily uptrend, guys, and starts flushing down here, I wouldn't say there's any major red flags. We would still just be looking for a weekly higher low for further trend continuation. I'll see what I do with it if it comes down into here. Valuation is way too overblown right now anyways for me to chase it at 112. But that being said, it is looking quite fantastic. Congratulations to all Palantir shareholders out there. And I'm saying it's expensive, guys, and I am a Palantir shareholder, so you can take it from me. I have skin in the game, and even I'm telling you, it is extremely, extremely, extremely expensive up here. Same thing with Tesla, right? You can only price in so much for forward growth. You know, we've already priced in what? The next 5-6 years of growth in this stock? Now, I understand Tesla, NVIDIA went on meteoric rallies as well, but is this not already a meteoric rally, guys? It's like, how much more do we want, right? Before we actually are starting to get a little bit too greedy. So keep that in mind. And now lastly, SoFi down about 2% today. SoFi still just consolidating, right? I mean, the daily bears are in control right now. Daily downtrend is clear as day, but they are struggling to make leaps and bounds of progress to the downside because we are in a big area of support. 16 at about $14. It's the same area that the bulls were able to defend back in 2021 over here. So not looking too bad, all things considered, guys. I still am a fan of buying SoFi. 14 all the way down roughly $12 DCA process though, guys, because even though the bulls looking for the weekly higher lows for expansion, we know that there's always a risk that we'd lose this area and then we just head into a bit more monthly consolidation similar to Tesla, right? Because we are far off the 12 EMA, so keep that in mind. I'll be DCAing a bit at 14, 13, 12, looking for the monthly higher lows for possible further trend continuation, and that's just how I see it on SoFi. And how am I doing that DCA process? Just writing short puts under the market, guys. One contract here under the market. If that gets filled, perfect. I'll do another one at 13. I'll do another one at 12. I like the medium to long-term prospects of SoFi, so I have no problem building a position very slowly. So that is everything for today's video, guys. Hopefully you enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every Monday to Friday, although for the next month, I won't be doing the Friday ones because I'm just traveling right now, and Friday's going to kind of be my day off to just kind of chill and have fun type of thing and explore, of course, well, even though I'm exploring every day. But that being said, we usually do the Monday to Friday when I am back home. And also, if you have any questions, guys, always feel free to leave them down below in the comment section. Always very happy to answer you guys within the first 1 to 2 days after you leave the comment, of course. And lastly, if you guys are interested in the private Discord, if you're interested in following my trades live that I take every single day, every single week here are all the trades from the inception of the Discord. And no, I don't only do short puts. We do call options, leap call options, call debit spreads, put credit spreads, whatever you guys can possibly think of, swing trades with shares, we do in the Discord. So these are all the trades since the inception of the Discord. The green check marks are win, the red little circles are very small losses. Overall, have had a very fun time, and members have been finding tremendous value from me sharing my trade ideas and opportunities and trading live as well. So you get access to all those daily and weekly trades. You also have access to our private morning live streams Monday through Friday for about an hour or two after the open. Even when I'm traveling, I'm still doing these live streams. And also, if you're not able to attend, they're always recorded. And you can also ask me your questions in our chat rooms all throughout the day, and I'm usually very happy to answer those as well. I also do share all my watch lists on TradingView. So if you don't want to build your own watch list and you want access to my options watch list for the wheel, large account watch list, which I don't show, which I use for my own high six-figure account, because yes, I do have the other account, not only the YouTube one that I show you guys. The YouTube one was made for you guys to showcase small account strategies, but for you guys with big accounts, I have a more refined wheel trading strategy that suits high 6-figure, 7-figure accounts as well. And it does not include chasing Palantir to the upside. Trust me, it's a lot more defensive than that. And all the watch lists and all the annotations, right? You, with one click of a button, you can copy paste all these watch lists and all the chart setups too. You get all the technical indicators, all the support resistance boxes that I draw on any chart, any time frame. They'll all be there. And especially all the annotations that I do after earnings, right? All these annotations on probably over 100 plus stocks at this point, they all come with a quick copy paste click of a button. You get access to all that. I had a few more features as well, such as the private videos where I show the higher level advanced option strategies that I don't always show on YouTube, surrounding leap call options, call credit spreads, or put credit spreads as well, call debit spreads, stuff like that, right? And also psychology videos as well, which members have been finding very good value from. So if any of that interests you, the link is down below in the description. And if not, I guess I'll see you back on the channel, guys. So that's it for me. Always a pleasure. I got a plane to catch. Hope you guys have a great night and a great day of trading tomorrow. I will see you tomorrow after the close. Be careful with CPI, of course. It is going to be a buying opportunity if the market dips, but just don't go too ambitious on dip buying. Buy it slowly, because you know the SPY and the QQQ, we can continue pulling back, and the tariff impact might even add to that downside. So I'm a big fan of buying the dips in these markets, but buy them slowly and only on companies that are high conviction for you and at levels that you actually want to buy them at, right? So take care. See you guys tomorrow. That's it for me, and peace.